What's going on, guys? Mike here, and today I want to talk to you about REITs. But before we do, please ensure that you subscribe to this channel, and I hope you enjoy the video. So the REIT that we want to look at today is Plaza REIT with the ticker symbol PLZ.UN. This particular REIT, I wouldn't say is a REIT that will get you rich quick or anything like that. I do find it's more of like a sustainability of monthly income in a portfolio. If you look at the 5-year trend here, it's only gained about 9% in the last 5 years, but it does have a dividend payout of 6.39%. So if you do the math, 6.39% over 5 years plus your 9% growth, you're averaging around 8% annually, which in my books is pretty good. There's nothing wrong with that. For those of you who don't understand what a REIT is, it's basically like you have a rental property, but you're minusing out the landlord aspect to it. So the landlord aspects are actually managed by property managers, which would be Plaza REIT, and you're just kind of a shareholder that actually collects the monthly income, and the monthly income is what the dividend payout is, right? So just kind of going along here, just to kind of get into some more details. So Plaza REIT does own 253 properties, and they also do have 27 properties under construction. So obviously more properties being finished will obviously generate more money in the future, which is always nice. They do have an occupancy of 97.2%. And they're kind of distributed primarily in Ontario. They do have some properties in Alberta and some more on the East Coast and stuff as well. They're not exactly in every province in Canada. Now, the primary locations that they do have, though, are like places like Walmart, Shoppers, Dollarama, Canadian Tire, Home Depot, a lot of essential companies, which is something I look for nowadays. One of the things I do want to go over, though, is some of the aspects that I do look at in assessing a REIT for a portfolio. And the first thing that I would kind of look into is the dividend payout. So this one here is looking over the last 5 years, and you can see here they pay out 2.3 cents per share per month. And so just looking at that, you'll notice here going all the way down to 2018, they've continued and held that 2.3 cents. Now, they also even held it through 2020, which is a really good stress test in my mind. Now, one thing that could be argued is that they haven't increased the dividend, and some people really like seeing that increase over the years. Now, like I said, they haven't exactly increased the dividend, but I do find, though, that they are investing a lot into development right now. So, maybe the increases are yet to come. I couldn't tell you that, though. So, yeah, so one of the first things, like I said, just super high level, is just checking the dividend. Is it consistent? Have they missed a month or, anything like that? Because that would be red flags in my book. The other thing I always look at is the distribution of FFO. So a lot of people will refer to as payout ratios for dividends and other equities. When it comes to REITs, you can't necessarily use their net earnings and figure out what their actual payout percent or ratio is at that point. The FFO minuses out like depreciation and everything on which is very important when it comes to real estate, because there's a lot of depreciation that gets factored into for net income. So again, FFO minuses that all out, and right now you'll see that they're paying out just under 70%, which is actually quite low to when you're comparing to the industry. So there's other real estate REITs that are paying upwards of 85 to even 95% of their FFO. So I really do like that these guys are in the 70th percentile. It also kind of tells me that if for whatever reason they run into trouble, they do have a buffer that allows them to continue paying the dividend. So another few things that I do like looking at in a REIT as well is the average maturity rate on mortgages. And in particular, this one is at 5.3 years, which tells me, it's a little bit safer in a sense, just because if their average was like 1 year, they could be hit quite hard on, like, say, this high interest rate environment currently that we're in. The other thing that's really important to look at is the actual average that they have for their mortgages. And right now it's at 4.06%, which is also a big plus in my mind, just because when you think about right now, people were upwards of 5 and low 6 percentile. If you had a REIT that was paying 2.5% average, that would be a concern of mine, because say this 70% that they have is going to go away once their mortgages start maturing, right? So again, being at 4.06, I really think that's a pretty safe bet, just because, of course, by the time, if their average is 5.3 years, mortgages might be around that 4% again. So again, that's another good thing in what I find as well. So the last thing that I typically will look for is to kind of find out what I believe that the stock price should be. So this one, like it currently right now, is at 4.3 or $4.38. And so what I typically do is I just move this into an Excel sheet here, is I like taking the total assets, which in Plaza REIT is 1.2 billion, and and then also finding out their total liabilities, which is just under 750 million. And I like kind of just taking the assets and minusing the debt, which comes up to 521 million. And I like dividing that by the number of shares that are distributed for this REIT. So when you do that, it comes back at $5.06. So that's kind of a number that I always use to figure out whether or not, like, you're overpaying for a property, or are you underpaying. So with this stock right now being at $4.38, it tells me that you're buying in at a pretty good price. So you can expect this to be going up closer to that $5 mark in years to come, once the volatility kind of slows down in the markets here. But while you buy in at this low price, it's nice because you can be pretty confident that the dividend yield will be sustainable, right? So that's kind of how this is obviously, like I said, one of the three REITs that I have within my RSP and TFSA portfolios, and I just wanted to share on how I kind of get my information and which ones to kind of go after. So if you enjoyed this video, please be sure to subscribe and like it, and I will be revealing more portfolio videos in the future. So I hope you like it, and I hope to see you next time. Thanks.